This episode of Analysis in Chains is brought to you by our sponsor, Bankera. Bankera is building a digital bank for the blockchain era, and their token sale is on until the end of February. You can find out more when you visit them at www.bankera.com. And now for our show.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams, and joining me today is Chris Housser. Chris Housser is the co-founder of Polymath. They're a Toronto-based blockchain startup that is doing securities on the blockchain. Chris, thank you for joining me today.
Hey, Nathan. Thanks for having me.
So tell me a little bit about Polymath. What exactly are you doing, and how did you get started?
There's a lot to cover here, but really, right now in the crypto world, there's two kinds of tokens or crypto assets, if you will. There's utility coins that represent access to a platform, and then there's security coins or security tokens that represent equity or an ownership stake in a company. And the amount of security tokens in the crypto world right now is minimal. It probably represents less than 0.5% of the $700 billion total crypto market cap. And what Polymath is looking to do is facilitate the process for companies or issuing entities to bring securities to the blockchain world and allow investors to participate in those offerings in a compliant manner.
I guess that makes a lot of sense that it would be sort of the next place to go, because it's hard to bring a security into the blockchain, isn't it? Like just legally or from a regulatory standpoint?
It's very hard. And not only is from a regulatory standpoint difficult, just the blockchain world allows transferability of tokens to anybody. If you have someone's Bitcoin address or someone's Ethereum address, you can send them Ether, you can send them Bitcoin, or you can send them an ERC20 coin that resides on the Ethereum blockchain with no verification, no knowledge even of who that person is other than their Ethereum address. And so really what Polymath is looking to do is create this KYC platform that in order to hold a security coin, people have to be verified. They have to go through a process where they demonstrate their identity, their country of residence, and for certain coins, if they're accredited as well, because many of the security regulations require that purchasers or investors of those tokens be accredited investors. And that's what we're really trying to solve.
Now, accredited investors, that varies from region to region. Are you starting with a particular region or country?
You're right that there's not different levels of accredited status, but different countries have different ways to determine if someone's accredited or not. And we're working with a number of KYC providers that already have that information available. So if an issuing company will only sell to accredited American investors, the standard for that will be the American accreditation standard. If it's, say, in Australia, they have a slightly different standard, and that the Australian accreditation standard is what will be used for those issuances.
So how long have you been at this?
We started roughly a year ago. My partner and co-founder, Trevor, came up with the idea. He had a private equity company that he was looking to tokenize himself. And he just ran into all these hurdles trying to do that. And rather than solving the problem just so he could tokenize his private equity company, he decided, why not make it easier for every other company like mine and every other company worldwide that wants to tokenize and offer securities on the blockchain? Why not create a platform that makes it easier for them? So this was his brainchild about a year ago, and then I came on board in the spring. I'm a lawyer by background, and we really started pushing it along in about May of 2017.
Okay, so you've been at this a year, and I guess you've seen a lot of strong growth in that time period, yes?
Yeah, so I've been in the blockchain world since 2013, Trevor since 2012. And really since that time, we've both been trying to push our friends into it. And, there's been resistance and people haven't been too interested in, Bitcoin or blockchain. But this year, especially now, all those people are coming back, and it seems like the world is starting to really take notice of this new technology, and everyone wants to be a part of it. So 2017 was a big growth year, and I think 2018 will be even bigger.
Now, when we look at the overall market for crypto projects, ICOs, other blockchain projects, you're totally right. We've seen an enormous explosion in that area. Have you found that something like the increased interest or even the increased Bitcoin price has driven interest in your project in particular?
I think it's just continuing to grow the community. And, a few years ago, there wasn't that much interest. And now a lot of people that are starting to come to this world are traditional stock investors. And they look at cryptocurrency and they don't understand it. They don't understand the valuation of any of these projects. But for us, we're hosting securities on the blockchain and stuff that will actually have measurable value. They can look at the financials of these companies. They're asset-backed tokens. So I think these traditional security investors that are now coming to the blockchain will likely want to participate more in security token offerings than they will in some, like an ICO that doesn't necessarily mean anything to them.
Now, it's interesting that you mention ICOs. I understand that you didn't do one and you're not planning on doing one in the future. Why is that?
That's right. So for us and for launching securities on the blockchain, what we see is a lot of regulations. We want to be the leader in that space. And it's sort of a conflict of interest, if you will, if we go and do an ICO and sell our tokens to all these people when it's a very gray area and it's not clear from regulators whether they're even compliant or not. And you've seen a lot of ICOs lately have been shut down, or there's been enforcement against them. There's class actions against some of them. So for us, we're not looking to, violate any laws. We're just looking to be a compliant platform that others can use to offer securities in a compliant manner.
Now, wouldn't you run into some of the same regulatory issues, maybe not yourself, but with all of your clients who are putting their securities tokens on the blockchain? Or is there a regulatory framework that you're working within that helps you with that?
What we're really doing is we're creating this protocol that allows issuers, investors, KYC providers, legal delegates, and software developers to unite. And so if you're an issuing company, you can come to our platform. Myself, Trevor, we're not needed. It's a decentralized platform, and they're able to link up with lawyers who are familiar with the blockchain space, familiar with securities laws, who can advise them on what they need to do in order to be compliant with regulations in both the jurisdiction their company or their entity is domiciled in, and of course the jurisdiction of any investors that they seek to raise funds from. So we're just creating the framework or the protocol for these parties to come together. And yes, our hope is that everyone uses it in a compliant manner, but we're not in control or enforcing what is done on the platform.
That's interesting because, so you don't think that your users misusing the platform would cause potentially trouble for you later?
I think it's similar to Ethereum. They've created this platform where people can create smart contracts on it. Mm-hmm. And people could create smart contracts on it that, violate certain laws. In fact, people are creating these ICOs that are violating certain regulations. But the regulators are going after the creators of those platforms and those particular ICOs rather than going after the Ethereum protocol itself, or rather than going after the founders of Ethereum. And we basically see it the same way. We're creating a platform that people can use, and we think the community is really what will help dictate which ones should receive interest or should receive any investment. If things are clearly a scam, the crypto community is, adept at, figuring this out. And there's a lot of resources online that people research and judge various platforms, and we see the same being done for any offering that happens on the Polymath platform.
That makes a lot of sense to me. I guess the question that brings up is, are you building your own blockchain, or are you building on someone else's platform like an Ethereum?
So yeah, right now we're not trying to really revolutionize technology. What we're trying to do is use existing technology and make a real world application that allows people to issue securities on that. So yes, we're using Ethereum, especially at the start. It's possible that down the road we may look to become blockchain agnostic and use either our own platform or operate with other existing blockchains as well. But we're just trying to solve the regulatory issues and put these parties together. We're not necessarily trying to reinvent technology. That being said, just to create our smart contracts, there is a lot of coding, and we have, I think, 1,000 lines of code right now to make it all work together on Ethereum.
Now, when people talk about regulation and regulatory issues, it's generally really vague. Like people will say things like, oh, well, there's too much regulation, there's not enough regulation, or we need regulation, or we don't want regulation. But given that you're sort of on the inside, you might be in a better position to see what regulation would be appropriate and what you feel would be inappropriate. And I'm curious as to what you think would be a good regulatory framework. What things would you like to see that would help ICOs and token sales and securities especially really take off in the blockchain space?
I think more clarity from the regulators would be a great step, because right now it's not entirely clear what you're able to do on the blockchain. They've shut down a few ICOs. They've provided some guidance, but it's still, there's a lot of uncertainty. We've been dealing with 3 law firms ourselves, and these guys are experts, or they've been in the space a while, and they've dealt with many other ICOs, and they still are somewhat unclear as to what the regulations are, or what could get you in trouble. So really all these companies can do is put their best foot forward to comply with the regulations as they see them. And so I think more clarity from regulators would be a great first step to help grow the community.
Absolutely. But what I was getting at is what regulations you would like to see. Like if you were in the position to talk to the regulator, if you had the ear of the regulator, and you were like, well, we've got these companies, they want to do something on the blockchain. What would make people companies that want to release securities on the blockchain? What would make them feel safe or doing so, or what sort of regulations would the mom and pop investors what would they like to see to protect them?
I think the whole point of regulators is to protect investors. And, the Securities Act, I'm talking the United States of 1933, was put together to make sure that these investors are protected from fraud and protected from financial harm. And I think they're great, but there's also, caveat emptor and buyer beware, that people should also do their own research before spending money on things to make sure that, what they're putting their money towards makes sense. But in terms of regulations, I think even just a statement by a regulating body saying, yes, it's okay for companies to issue shares on the blockchain would be a great first step. And of course, yes, you need to follow the current regulations, but rather than issuing a share certificate held by, numerous third parties, you can issue a share on the blockchain that's held by, that you hold yourself. And that's what's great about this whole technology, is it eliminates a lot of those third parties, and people are able to hold their own assets safely and securely, provided they know how to use the technology, which is definitely a learning curve right now.
Probably. I have trouble imagining my grandparents using an online blockchain trading service, but it's definitely the way of the future.
I think it's still the early days of blockchain. A lot of people think they've missed out, and it's gone up so much since 2009 or even since 2014 or 2015. But I think it's commonly said that comparing it to the internet, we're around 1994 or 1995 right now, and I think there's still a lot of room for growth, and a lot of those on-ramps and tools still need to be built to make it easier for the average person to use this technology.
So do you own any crypto yourself?
I do, yes. I think really the best way to get interested in the space is to have some skin in the game. And, you can buy $100 worth or, $50 a paycheck, and just, that's what gets people interested in this technology. If I didn't own any, I'd, read about it a bit, but I wouldn't be as interested as I am, given that I have some skin in the game, if you will.
I guess the question then is, how do you evaluate? How do you do your own research for what constitutes a good project that you would trust?
So I used to, before I was with Polymath, I used to do a lot of research on it. I think some of the good sources are Reddit. Reddit has a great community for crypto projects. Slack is really good as well. And just assessing who the team is. Are they people that you believe in that will deliver what they say they're going to do? And then what are they doing, and why should there be value to that project? And I used to spend hours a day doing this sort of research, but since starting Polymath, I just haven't had the time, and my involvement in any of these new projects has been very minimal because I haven't been able to do the research or due diligence that I'd like to participate in them.
Maybe after the company grows and you get your third boat, you can spend more time on crypto. That's my dream. The boat within a boat.
Maybe, yeah. Spend more time on crypto and spend more time with my wife, which has also been difficult in the past 8 months because it's just been so busy. Like no weekends, no evenings. It's been just building this project from the ground up.
It's always that way with new projects, isn't it? It's good to hear that you're coping, though.
No, it's definitely fun. It's a company that I've started, so I enjoy it. It's a lot of work, but it's something I like doing a lot more than I used to do, sitting at a law office and working for another group of people. It's working for myself, but it's working a lot more hours.
So what would you say if you went back a year and saw, and you were able to give yourself advice, the young man looking to start his crypto project, what advice would you give that person, that past you?
I'd say really just try to surround yourself with people that share the same vision and the same work ethic, that they're committed to, give their all to the project. And this has been my sole focus really since I've started back in May. And it's needed because this space moves so fast that if you take a week off, or if you take even a few days off, stuff can fly by you. And it just requires constant attention and focus until you're able to, finally release the platform and take a bit of a step back. But the whole building phase is, be ready for it. It takes a lot of work and effort.
With, a lot of people, I'm sure, are considering doing their own blockchain startup, their own blockchain project. I guess the question is, how would they find the right team members, the right people to surround themselves? How did you go about it?
So, in Toronto here, there's a great blockchain community. I mean, Ethereum was developed here. There's a lot of other big projects here. There's meetups and conferences every week. So I was sort of doing that circuit, going to all the meetups, getting to know people, and really just getting involved in the space. And then through that time, over the past couple of years, I met a lot of great people and established relationships. And here we are now that we have a team of roughly 25 people now helping build out Polymath.
Congratulations. It sounds like you've come an amazing way so far. Now, I want to shift gears just a little bit. Have you been following the Bitcoin price and the Bitcoin drama at all?
It's hard not to. Yes, I have been following that.
Well, I guess first question, what do you think? Bitcoin or Bitcoin Cash?
I got to stay true to Bitcoin, and
old school.
It's just old school.
How come?
It's hard. I've had some friends who've bought Bitcoin recently, and to transfer it costs about $20 now. And it needs to be fixed, but right now it does offer the most security through its mining, through its hash power, and it's its 9th birthday today. So happy 9th birthday to Bitcoin. It was released on January 3rd.
That's true.
2009.
That's true. We're recording on January 3rd. Well, happy birthday to Bitcoin.
I also think there is room for both. So, Bitcoin can sort of be the store of value where maybe the majority of assets are held, and Bitcoin Cash or Bitcoin Gold. Actually, I don't really like any of those other forks, but Bitcoin Cash, we'll say, can be used as more of a payment network. Where it's
a lot of people are saying that we're in a price bubble with Bitcoin. And I've talked a lot about this with my co-host, Neil, and we've gone back and forth on the factors that are influencing the accelerated price. I'm just wondering, you've been in the scene a long time. What do you think? Should we expect corrections, or should we expect increased growth? Do you have no idea? You just want to guess?
I think adoption is still coming very heavily, and I know all the exchanges are just overloaded with 100,000 new signups every day. Some of them are even closed. They just aren't accepting more people because they can't handle that sort of volume. And I also don't think there's much institutional money yet in crypto. Like, as you mentioned earlier, your mother or your father, they don't know how to hold Bitcoin. But if they could talk to their broker and say, hey, buy me $1,000 of Bitcoin, and the broker was able to do that, that presents a whole new group of people that are able to purchase blockchain assets. So we haven't even reached that yet. So I definitely think there's still a lot of room for growth. Yes, it will go up, but yes, it's also going to go down at some point. There's been a few crypto winters, as they call it. Basically, 2014, once Mt. Gox was hacked, Bitcoin went from $1,200 American down to $200, and sort of sat in that lower price point for about a year and a half. Will that happen again? It's definitely possible. So do I know when or if it will happen? No, but investors or purchasers of cryptocurrencies definitely need to be aware that it is possible. It can go from $16,000 or whatever Bitcoin is now, down 90% or something, down to $2,000.
See, I like that approach because that was my argument to Neil, my co-host. I said that the market hasn't stabilized. There's still thousands of people coming in. So I could see both arguments. It makes sense, but I think we're in agreement there that there's still a lot of people that are coming in, for better or for worse.
I will say I think there's about, on Coin Market Cap, 1,000 different cryptocurrencies, or 1,500. I'm not sure how many are listed right now. I think a lot of those will probably end up going down, and really the strong will survive. What that number is 50 or 100, I'm not sure. But I think a lot of these projects or cryptocurrencies will end up going down.
What about, and I guess the last thing that I want to touch on, sort of related to the market in general, is the issue of market manipulation and the whales, because that really does affect when you're talking about putting securities on blockchain. With Bitcoin especially, there's about something like 1,000 users that own like 40% of Bitcoin. And when any one of these whales makes a move, it affects everybody. They put it into any one coin and they can pump it, they can dump it. Do you imagine this to be a problem that you're going to face when regular companies are putting regular securities on a blockchain?
I think there probably should be more regulations about that. I'm not sure if even insider trading rules apply to cryptocurrencies at present. So if a whale pumps and dumps Bitcoin or some other cryptocurrency, I'm not sure. I don't think there's any enforcement or possible repercussions for that. But yes, if we're talking securities, there definitely needs to be, one, clarity from regulators, and two, the possibility of enforcement of insider trading rules or something else for those types of actions.
It gets really complicated when it's decentralized, but I guess with securities, they're going to be located in whatever country the company that issues them is located in. But it's harder to do something that's really decentralized like Bitcoin.
But what's great about the blockchain too is it's just so transparent, and you can look at who owns, the top 1,000 owners of Bitcoin, and anytime you can set alerts that anytime one of those top 1,000 owners moves their Bitcoin, you can see that. You can go to a block explorer and watch that happen, and possibly even track, what other currency or where they're moving their money to. So it's interesting in that people think it's this whole private and anonymous network, but it's kind of the opposite. It's very open and transparent, and you may not necessarily know who the holder of that asset is, but you can definitely watch what they're doing with it.
I guess my next step is I've got to make a bot that monitors that and then automatically buys and sells whatever the whales are buying and selling.
I mean, I'm sure a lot of people have those types of systems in place.
Yeah, I'm probably late to the game with that one.
And it's not just watching them move stuff. It's, famous people writing tweets about various cryptocurrencies, and they shoot through the roof. So, yeah, it's not the total crypto market cap right now. I think it just crossed 700 billion either today or yesterday, which sounds like a big number, but compared to the financial world and the securities world, it's nothing. And people talk about the bubble as well, but and compare it to the .com bubble, and even that, it reached $3 or $4 trillion before it crashed. So if you want to compare it to that, and that's $1999, $2,000, there's still a lot of room for growth in the blockchain asset world before, if it does face a similar crash, if that's what you're looking to compare it to.
All right, Chris, we should wrap up, but I want to just ask before we sign off, what are the next steps for Polymath? What do you have planned for Q1 and Q2 of 2018?
Q1 is a a very, very busy time. In fact, this month may be the busiest of all months thus far for the project. We'll be in a Bitcoin Miami or blockchain Miami conference in mid-January. We'll be making some announcements there, but really what we're looking to do is get the platform launched and token distributed so people can start playing around with the system.
Excellent. Well, good luck. Best of luck with your launch. Chris Housser, the co-founder of Polymath, thank you very much for joining me on the show today. Best of luck, and hope you can escape the cold down in the Miami Bitcoin conference.
That's the plan. I'm also going to Barbados, where our company is headquartered. I'm going there on Saturday.
That's the way to do it. The blockchain snowbird. All right. Thank you very much for joining me.
Thanks a lot, Nathan.
Thank you.